Good day for everyone. Today we are in Web Summit, Qatar, and we have amazing opportunity to see what people are doing to make our life better. Everything about digital stuff, artificial intelligence, and much more. Just look.
So the cells that are broken, damaged, inefficient get consumed and the energy gets released or the resources get released to focus on the better ones. So I think when you constrain the system gets better by getting rid of waste. So our panel now is down 2 minutes. From 20 minutes to 18 minutes, we're going to have a more efficient panel.
So Sam, how do we balance between being forced to fast and being voluntarily decide to fast because we want to have our company based on frugality and innovative company. So how do you see this?
I think if you have a choice, you probably want to make sure that you are very well funded or more funded than you need to be. But I think that those challenges and the scarcity of capital has been very helpful for many companies. If I look back at our early days at Namshi, we had very little access to capital in the region, and we just had to make do with what we had, and therefore we were able to build a company with the resources that were available to us. That depended on itself. That depended on our ability to build, to turn into sustainability as quickly as possible. Fast forward to Tabby, that problem was not as extreme as it was in 2010. Access to capital was available, but to be honest, we wanted to treat it the same way. We wanted to treat it with the same kind of, we put on the hats of that capital being scarce and that capital not being always available to us. And to be honest, I think it helped us, because when the tables turned in 2022, it was very essential to make sure that you were able to run a company without that excessive capital that was available literally 12 months before that.
So, because you mentioned this term, it's related to a term that is being used like overfunded companies or very fast-growing companies. So 3 years ago, you were paying salaries yourself, and now you are $1 billion company. Is it a growth that has been very fast for Tabby? Is it something risky now because you are also closing to IPO?
So we were fortunate to have built a company at a time where access to capital was relatively cheap, and so that capital was relatively readily available for us. But as I said, right, it was important to ensure that we were looking for a time that wasn't always going to be the case. So fast forward to where we are today, that capital or that change in cost of capital has really hit many companies like ours quite hard. We saw many companies that grew in the heydays of the NPL completely disappear in other markets where that was available. So I think it is quite important to ensure that you're building in times where that change is bound to happen with a cost of capital that's likely to change as well.
So GV, from an investor's perspective, what are your top tips for startups looking to scale in a tight economic environment?
Yeah, I think first just to recognize that you are, especially if you're in this region, you're in a great place to start with in a market that's vibrant. If you're in some other parts of the market where the fundamental growth of the underlying economy is harder, then you've been dealt a tougher card. But in general, at this point, the best thing to do is to go to fundamentals and ask yourself, saying, look, do you have a value prop that really resonates with the customer, that allows you to kind of price your product at market clearing price and still have a strong economic engine? So the most important thing is to just focus on getting your economic engine right. And then you invest in scaling, and you scale faster or slower depending on how much capital is available and what the cost of capital is. To Ossam's point, if the cost of capital is cheap, you can actually run a few extra experiments. When cost of capital is expensive, like it is now, you cut back and focus on what's core for you and make sure that is actually compounding nicely.
Okay. So Hussam, when considering an international expansion as part of a scaling strategy, what factors should startup prioritize to ensure success in new markets?
So we looked at this question a number of times over the last few years, and I think we realized very quickly that it is important to understand what fundamentally makes our business relevant to a particular market. And for us, that was two things. One is a large and growing e-commerce sector, and two, it is a strong economy, a strong consumer economy. Right? And so when you look around us, there's not many of those markets available. We did a short experiment in Egypt, and those two criteria very quickly broke apart. So I think we quickly realized that what was important was to focus on that, those core fundamentals. Where does our business actually make sense? And for us, right now, the answer is very, very clear. This is a GCC business only, and there's a lot more for us to build within the GCC, from the launching point of a large consumer base and large merchant base to build on this business. But geographic expansion is definitely not on the horizon for us. I don't think we see the merits in it. It's not something we need to force. I think it's always a question that we're asked, and investors, journalists, it's something that excites them. But for us as a business, it's very, very clear. The market is a GCC one, and it is for us a focus on market depth rather than just pure breadth.
If I can add to that, since we're investors with Osam, I think one of the things people underappreciate is while our market sizes in the context of the world in GCC seems smaller, the profit pools are actually quite strong, right? Buy now pay later in this region is probably amongst the best economics you would see anywhere in the world. So you are in a market where your economics are very, very strong. So to the point on going deep and making sure you can be a large part of the market is going to reward you quite handsomely. If you go to other markets where the economics are not as good, you're going to dilute the proposition. So one of the things we encourage our founders to think about is, can you capture a larger share of this market and be a very dominant leader, and you'll get really richly rewarded.
So this is a good point to ask Osam, because you are talking about the GCC market and how big it is. Now you move to Saudi Arabia, where another competitor, Tamara, is there. It's also worth $1 billion company. So can you live with the Tamara together in the GCC market?
Competition is healthy. Competition keeps us on our toes. I think it also is a proof that this is a market where there is depth and there is opportunity in. I think as long as your competition is doing things rationally, and I think competition is forced to do things rationally in a market like we are in today, then we could coexist. I think what had happened 3 or 4 years ago, when everybody had access to excessive capital, is there was irrational exuberance and competition that just killed each other off and actually destroyed the pie for everybody. I think we're beyond that today. We're hopefully beyond that today, where you're only able to get access to capital to scale a business in a very rational, sustainable manner. And if you're doing that irrationally, then you're probably hurting your own chances.
Okay, can Tamara and Tadi marry each other someday?
Can we marry each other? There is multiple ways in which that could happen. I think for now, we're two separate companies. And I think the opportunity is very, very big to continue.
Because it seems maybe a final exit or a solution when you break each other's bond in the market, like previously with Uber and Careem. So.
And that's what I'm saying. I don't think we're in a time where that is necessarily going to be the case anymore. Right? 3-4 years ago, you could have said, "Let me outspend and outraise my competition, and I will win." I don't think that is necessarily something that needs to happen today. There's various directions in which we can go in. I think if you just look at the banking sector in the region, there's 10 large banks in Saudi. I think there's only 2 buy now pay later players right now in the GCC. I think there's a lot more room for us to grow than to look at consolidation at this stage.
So you are open to that. So in 2024, GB, what are investors prioritizing when considering startups for investments?
It's the same set of things when you think of it in a long horizon, right? So you want to meet great founders who have a specific cause they're going behind, solving a genuine problem, and they're doing it in a way that can build long-term value and sustainable value. So that's the fundamental thing. So we are looking for something that's a large enough market where a good founder has a specific solution that can create long-term sustainable competitive advantage. What happens when markets like 2020, 2021 happens is everybody over-focuses on growth at the risk of saying we don't really care about economics because capital is cheap. In a market like 2023, 2024, the focus is much more on getting the economics right, which is having a strong fundamental economic engine, getting the unit profitability, and then eventually company profitability, so you can see a path to sustainability. I would say most people are indexed on profitability today than in the past.
So, Hussam, you talked previously in another session about IPO. It seems inevitable. I mean, you are going to it for TABI. So, tell us, is going IPO is the final destination for any, fast-growing startup? Do you see it successful? Because before, I mean, few years we saw or we witnessed this buzz around SPAC and being listed in NASDAQ, and now there are encouragement for startups to go IPO. So tell us, how do you see the IPO as a solution, as an exit?
Obviously, various reasons why companies IPO. Some could be driven by investor requirements, others by requirements of an exit for a founder. I think we're fairly clear that for us, it's just another step on the journey. It's a source of capital. It's a scalable source of capital. It allows us to secure debt at much more attractive rates in the future. I think it just provides a lot more credibility for a business like ours that is looking at broadening our product into additional financial services offerings. And so for us, it's, as I said, just another step on the journey, and one that we're very, very excited about. We see the Saudi market as a very attractive market. It is very retail heavy. We have a large retail consumer base. I think just all that put together makes a lot of sense. So for us, it's something we're working on, we're quite active on, and hopefully we'll have a bit more news to share in the not so distant future.
So final question for both of you. Looking beyond 2024, what long-term strategies should startup be considering to sustain growth and remain competitive in challenging global economy? I'll start with you, G.
Well, I mentioned this, and it's going to be the same thing. Just focus on the fundamentals, first principles basis, have a strong economic engine, and focus on compounding and sustainably for the long term. As long as you have the focus of doing this over a long period of time and play the long game, you're going to be really well off.
Actually, so same as what GB just said. I think the only other thing I would add as a founder running a business is, for us, it is just prioritization of what your customer needs. For us, there's many, many ways in which we can build this business, and many ways in which we can diversify our product offering. But what we keep very close to our core is ensuring that we're only building based on what our customer needs today, what our customer needs in the not so distant future, rather than what we build, what we believe is the latest buzz or the latest market requirements. Right? It is something that is very fundamentally at our core.
So just a few seconds I have. I'm very interested to hear your answer about being in marketplace. I mean, as TABI, are you going to compete with your clients? Because being marketplace is something.
So yeah, I think on your question on offering a marketplace on TABI right now, and today we have over 4 million listings of products on the app. We see this completely as a value add to our merchant partners. This is not a replacement. We're never going to be selling a product, but we have a very engaged customer base that is looking for places to shop, and they're looking for products. And our duty and the value that we provide our customers and our merchants is making that journey a lot easier. and making the visibility of those products that our merchants are selling a lot more in reach.
Great, thank you. GD, Ravi Shankar, and Hussam Arab. Thank you so much.
Thank you so much.
Красиво они ходят под музыку.
All right, more talk about venture. Venture capital dollars have been drying up in North America in recent years. Funding has slowed year on year since 2021, as I mentioned already. The same cannot be said, though, of funding from the Middle East, in particular from the GCC. Why is this, and is it set to continue in 2024? To discuss the future of Middle Eastern funds in the global economy, please welcome in conversation with Zachary Karabel of Time, from Newer Capital, Khalid Talhouni, and from the QIA, Mohammed Al-Soidi, and Noor Sweet, the founding and managing partner of Global Ventures.
Очень срочное обновление, пожалуйста, прокрутите информацию.
Good afternoon. So, are you ready for the best 18 minutes of your life? I certainly am. So we're going to talk a bit about the role of Middle East arena capital in the global system. And I think just to kick things off at a big picture level, I mean, there was about $2.5 billion of venture fund raised in 2023, which was down from whatever its height was a few years ago, but still a lot more than it was 10 years ago. I think one of the major destinations of that capital for the first time was Saudi, which is interesting that Saudi Arabia has been sort of the source of inward funds, which is not global in that sense, but a change in the ecosystem. And I come from New York, and American investors are not usually as focused on MENA and regional development as probably they should be or could be. But I guess, before we get more into some of the specifics from each of you, like, what are you seeing at the beginning of 2024? Is this like a good period of time? Does politics matter in any of this in any way whatsoever, regionally or internationally? And to what degree are you focusing your investments outside of the region as opposed to just in that? And there's a little bit of a difference in sound between Khalid and Noor, who are both in the venture world, and then Mohammed, who obviously is in the sovereign fund world, so we can also look at that a little bit differently. Why don't you go first, Bill?
Wonderful, thank you. Thank you all for joining us. I'm happy to set some context here. So yes, you're right. Last year there was about $2.6 billion deployed across MENA and venture funding, and the year before was our peak year at $3 billion. Still much higher than when I first started the firm. That year we had $400 million the prior year. So it's grown massively in 6 years. I don't think that there is a huge political influence in the venture funding ecosystem. I think the region remains very strong. We invest across the Middle East and Africa. So the region remains 1.9 billion people. Can't ignore that. Half are under the age of 30. You can't ignore that. It's a growing demographic. These are growing economies, and particularly now amidst the global economies that are maybe not so growing as well. And as quickly as the region. So we find ourselves in a position where you have a growing demographic, a rising population, 85% digital penetration, in growing economies that are attractive to the whole world because everyone is looking for growth. And we're sitting in the middle of it. And so really the question is, how do you use technology to address challenges or opportunities in this part of the world and parts of the world that can still grow? So that's our view. To answer your question on how do I see 2024, I think it's going to be a great year. I think we've had a lot of breakthroughs over the last few years. We've had some great exits. We've had the first fintech unicorn that we just heard from Hussam. So I think the region's really proved itself, it's coming of age, and it's only onwards and upwards from here.
Yeah, I think just to double down on what Phil was saying, I think we are also very positive on the underlying macro trends that are driving our region between demographics, overall economic diversification, liberalization of our economy, so like big improvements in terms of the regulatory environment. So the net effects are overwhelmingly positive, and while there is some geopolitical headwinds, I think that's par for the course in emerging and developing markets. I think it's very important for us to take stock of the very long-term trajectory. And I think, as you said, if you compare to 4 or 5 years ago, you know, the availability of venture capital was quite limited. The institutional allocators were not investing locally. The depth of the talent pool of founders was a fraction of what it is today. And if you fast forward, if you look at the trajectory in 5 to 10 year increments, it's a sea change. It's an entirely different ecosystem. I think we're seeing huge outcomes. We just had Bassam Arab on the panel before ours, and that, you know, is a testament to how this ecosystem has developed. He's the second-time founder, had a great outcome his first company, is hurtling very quickly towards an incredible outcome his second company at a much larger scale. And I think that within that story of Demshi and Tabi, his companies, is really a story of the region developing at an incredible pace. And so we're incredibly excited to kind of be part of the story, to really help support up-and-coming entrepreneurs, solve for big problems in the region, and help the region really realize its potential.
Maybe to add a few things more on the sovereign-related side. So this region has about close to 3.7 or 3.8 trillion AUM. And what this region is finding out, a lot of policymakers, is that with time we have to privatize more and have more and more reliance on privately owned businesses or international businesses that have presence. At the same point of time, a lot of policy improvements have been happening, as you alluded to earlier, and will continue to happen. And we have also favorable demographics, I mean, as Khalid said. So I think those areas, those improvements make us as a fund continue to invest domestically and think about improving innovation and contributing to it positively. As I mentioned to you before we get in, actually yesterday we announced a sizable commitment, a $1 billion commitment for Funded Funds program to focus on funds that want to establish presence in the Middle East. I think we believe Qatar is quite competitive for that. The last point I mentioned is around where the capital inflows come to the region. Sometimes, maybe in times, where it's actually not happening in other places because of the heavy reliance on hydrocarbon receipts. Not necessarily in a time when markets are down globally, it will have a positive correlation to commodity prices. So sometimes this also helps us as a region, to contribute more in times of global fatigue.
So maybe to piggyback on that point about you have trillions of dollars of money, which has traditionally been either in sovereign wealth funds or families, and then you have a VC model which, at least in much of the world, has either depended on public markets as the pathway to liquidity or other companies buying them. I'm wondering about the sort of the bridge between that amount of capital and I guess either exits or what the life cycle is of a smaller company. You mentioned, are you going to sell to Mohammed, or are they going to buy companies? Or what's because you don't have the same, the region doesn't have the same depth of liquidity in public markets, so that's not the same pathway as you would have had either in Asia or Europe or the United States. So maybe
Sure, I'm happy to start with a short anecdote. So Dubai is home to me. It's been home for 29 years. In 2005, so about almost 20 years ago, I joined a business my father had started in '96. So you're talking about generational family businesses. By April 2008, we IPO'd on the LSE and the Nasdaq Dubai. And we IPO'd as the largest interior company in the world in 22 markets, right? Based in the region, with 9,500 sets of boots on the ground around the world. And then we ran the public company for 5 years. Then as a family we left, it stayed public until last year, at which point last year a sovereign wealth fund in the region went private. So the full life cycle, beyond exit, beyond all of that, back to private, which we see in all capital markets on the world, is very much possible here. And my thesis is that you can do that in interior contracting, you can do it in tech. You don't have 9,500 boots on the ground, I hope. So with that conviction, you can build global companies in the region, you can IPO from the region, you can IPO internationally, you can IPO in the region. We've seen it repeatedly. Are the capital markets that deep? Is it as available? Not yet. We're working on it, we're working very well on it. I might say we've seen several IPOs across the region for the last few years that have done incredibly well. And that's really good. Is it the only path to exit? No. Is it a path to exit that I would recommend for a founder? No, I've been there, done that. I don't wish an IPO on anyone. I would rather look at a secondary sale or an M&A transaction. And so us as a VC, we've made 60 investments over the last 6 years. We've had 6 exits. Our fund one returned 70% of its capital within 3 years from several exits. We're investors in Tabi. We just exited our Series A position in Tabi and Sank and Kasam. We did incredibly well. Right? So for us, can you exit your positions as investors? Yes. Does it have to be via IPO? No. As a founder, are there many other ways? Yes. So I think IPOs are important, but they are not the be all and end all.
Yeah. I think what's different and unique about the region is that historically most of the exits from VCs have come to through kind of trade sales or secondaries. The companies we were involved in, like Kerim, for example, that was a massive exit to Uber. And you do see a lot of that, but I think what's really interesting at this moment in time is there are a couple really interesting dynamics happening that are changing the game with respect to IPOs and capital markets, public markets generally. So I think firstly, intergenerational change within families, so people inheriting and the shareholding getting diversified, is leading to a lot of traditionally family-owned businesses going down the IPO, so that they can crystallize the returns from their shareholding. And I think what that's leading to is a much deeper public markets in general. So that means that as the shift happens, as the same the increased amount of capital available to venture capital, you do have a deepening of the capital markets, and you do have the emergence of that as a route to exit. So we had the largest and the first really tech exit in the region happen a year and a half ago in the form of Jazz in Saudi. I think there are another 4 or 5 in the making hopefully in the coming 6 to 12 months. And I think we're going to see a wave of these exits emerge in the tech sphere as well, as the capital markets develop and grow as well, irrespective of tech. So that's kind of all part of the very positive dynamics at play in the region generally.
They've said great things. The last thing I'll tell you is that do not undermine the attractiveness of the infrastructure, the policy, positive tailwinds that a lot of the countries out there. The infrastructure is quite modern, the quality of life is quite improving, given improvement if you look at it for the past 10 years. So all these kind of elements, in addition to the points highlighted, and the development of capital markets, are going to be positive drivers for more businesses to be developed and expanded. And the central location for the Middle East is actually quite interesting. And at a time when you have a lot of geopolitical frictions and things to be stabilized, I think the Middle East can play a vital role on the Middle East.
So on this, and I want to maybe follow up with you, Mohammed. It's certainly true. The Saudi Investment Authority has had several $100 billion for 20 plus years and has been deploying it, but the sheer size of, between ADIA and QIA and others now aggregating several trillion, which is basically equivalent to what Norway and the Chinese investment funds are, is a considerable chunk of money, even in a pretty liquid global system. And traditionally that money has gone outside the region, right? I mean, a lot of the investment authorities have looked outside of MENA for returns and maybe to diversify. With, as you described, this kind of burgeoning market, young market, reformed infrastructure, is your focus shifting more regionally because the opportunities are here and the capital is present, as opposed to even 10 years ago, where the idea was much more we want to diversify globally? Maybe you can go this way this time.
Not necessarily. I think you should look at the problem with the sovereign wealth funds as a definition. There's a lot of different types of sovereign wealth funds. And I think we should go under the hood a little bit and look into the objectives of that specific sovereign wealth fund and the dynamics of the stakeholder. So is it more of a maturing economy or is it more of an emerging economy? Does it have employment considerations? Does not have employment considerations? Also, what is the policy structure within the government itself? Because sometimes some strategies like having more money to VC can open a lot of questions. Because what about investing in 10 businesses and 5 of them goes to zero? Are the stakeholders involved willing to take those risks in exchange for the 5 that will make it up for the rest? So both between the government dynamics within the country and the maturity of the economy determines the objectives. Now, in terms of the last point, in terms of things shifting internally, I don't think it's really shifting. I think looking at those areas and identify the role of the sovereign wealth fund in the domestic economy.
I think just to add, from our interaction with the different sovereign wealth funds and government-related entities, I think as we validate this asset class, the venture capital asset class in MENA, and as we generate more exits and more returns, and show that you can build, you can invest in and build in great scalable businesses in the region, I think naturally it becomes a viable asset class that these types of allocators are looking to invest in. And we're already seeing that as the past 3-4 years we've had a good number of exits emerge from the region. We have real ROI on the investments made in the region. You're seeing the sovereign wealth funds engage in a way that they never really used to go back 5, 6, 7 years.
So Nora, we'll have you have the last word here. The question of, so you run one of the largest funds in the region. As you said, it's down from its height a few years ago, but it's way bigger than it was 5 or 6 years ago. Does MENA, do you need more capital? Is there too much capital? Is there just enough? If you had like a magic wand of, would you rather be managing $500 billion in a sovereign wealth fund, or would you rather be managing what's the capital needs, and is it adequate? And should there be more? Should people knock on your door?
It's a great question, and I wasn't one of the sovereigns historically, and now I'm doing this. So I think that this is where really the opportunity lies, is in venture. I think it's wonderful to have the sovereigns on board. Even in the U.S., Europe, 70% of venture funding ultimately comes from a pension fund or an endowment. So you take a look and you're like, okay, that's great. As those ecosystems grew, that funding came from their equivalent of the sovereigns. And as our ecosystems grow, like Khaled said, that equivalent will end up coming from our equivalent of the sovereigns. So it's only natural that they grow together and they build on each other. I think the way that I see it is, I like data. I'm a very data-driven person. And the region still stands at 0.02% of GDP goes into venture. That compares with 0.6% in the US or 0.8% in other markets. And you take a look, and it's not that we're a fraction by a quarter. No, we're a fraction by multiples. So until the founders in the region building a company just as great as if they were building it somewhere else stand less of a chance of getting funded and scaling that company, we have a duty as a VC community and as a sovereign to find the right strategic capital to fund them so they have the same opportunity if they were doing what they're doing here anywhere else in the world. And that's the gap we're trying to fill.
That's a great way to end it. Thank you all. All right. As we all know, even if you don't use Facebook as much as you used to, Meta is still the home of some of the most popular tech products in the world. Facebook, Instagram, Threads,
Messenger, WhatsApp, and the Meta Quest. Facebook boasted 3 billion users at the end of 2023, will add 70 million more by the end of this year. The stock has been flying high these past few months after massive cost cutting. Meta added hundreds of billions to its market value this month alone. Add that to the reports of strong sales of the Meta Quest as more and more people are acclimating to augmented reality. It looks like Mark Zuckerberg's year of efficiency is paying off. Here to talk to Samir Hashmi of the BBC about what's happening at Meta in 2024 and beyond, please welcome Meta's VP of Product Policy and Strategy, Andy O'Connell.
Oh, very good afternoon. Andy, how are you feeling?
Energized. This is amazing.
It's amazing, a lovely set, a very interesting audience. So let's get started. Meta. Now, when we talk about Meta, it is, the first thing that used to come to my mind used to be Facebook. But then over the years, the company's evolved with new products, whether it's WhatsApp, Instagram, you have had Threads recently. But one of the major areas where Meta was focusing in a big way was the metaverse over the last few years. And now you are expanding and looking at AI in a big way. And this is something we're going to discuss, which I'm sure we've been talking about a lot, AI and its impact really in the society and businesses and things like that. So let me begin by asking you, metaverse and AI, what are the similarities? Are there any similarities where these two products, major products, can work together? How's that coming along?
Yeah, thank you. Well, this is amazing. I had a chance to walk on the floor and talk to a bunch of companies, and it's so exciting to see this much energy, this much innovation. And at Meta, we're all about innovation. And as you said, we're really focused on two big bets. One is the metaverse, and one is artificial intelligence. First on the metaverse, our idea here is that this is the next computing platform. This is the thing that comes after the internet. It's 3D, it's immersive, it's a combination of VR and AR experiences. But at its core, the idea is empowering people to feel like they're present in person with someone else, whether they're doing business or entertainment or education. And at Meta, we're trying to catalyze that. It's still the early days, but we're trying to sort of work at each layer of the stack to jumpstart the ecosystem. So we're building hardware, the Quest 3, which is our sort of flagship VR mixed reality device that's out there. We have an app store, we're supporting developers, and we're also shipping our own first-party apps like Horizon Worlds. So there's a lot going on in the metaverse space, and all of that work, and indeed all of the work that Meta has done for the last 15 years, whether it's ranking content on Facebook and Instagram, or doing content moderation, or matching people with ads that they find meaningful, all of that is enabled by advances in artificial intelligence. So it's actually something we've been focused on. We opened the Facebook AI Research Lab back in 2013. So it's not new for us, but it's incredibly important, and it is something we're investing more and more in.
So tell me, how does the strategy differ? Because when you're looking at the metaverse, it's a completely different domain, and then you have the AI. So how different is the strategy when you're approaching these two domains?
Yeah, I think it's a great question. Well, let me tell you a little bit about the strategy that we're pursuing on AI right now. So as I said, it's not new for us. We've been really focused and had dedicated labs for at least more than a decade now. And it's really allowed us to supercharge our core products like Facebook, Instagram, WhatsApp. These days, in addition to sort of building on those successes from our traditional apps, we're also trying to catalyze investments in open innovation through things like Llama, which is our large language model. And the idea there is unlocking innovation. Innovation is core to everything we do at Meta, and our view is that the more we can put this technology out there, the more we can put those tools out there, the more we can help companies like all the ones that are gathered here to build more exciting, creative products. The other side of it for us is using our existing products like Facebook, Instagram, Messenger, WhatsApp to get AI tools and advanced AI tools directly into the hands of people. As Casey said in the intro, more than 3 billion folks are using our products every day. And so there's a huge opportunity for us to empower those people. And so I'm happy to talk about sort of the specific things we're doing to empower people with those AI tools. But it's a really exciting time to be in this space.
So give us a sense of the products that are in the pipeline, and what are we going to see coming out of Meta's stable in this year, 2024, and maybe next year?
Yeah. So there's a lot.
Maybe the big ones that you're excited about?
So the first thing worth mentioning is that we're currently working on Llama 3, which is our next generation large language model, and we hope to be in a position to show that to the world in the coming months. And then on the sort of more consumer product perspective, we've already shipped a number of things and we're working on a number of things. A lot of it has to do with creativity. So for example, on Instagram, Facebook, WhatsApp, we have a product that we launched called AI Stickers. It's fun, but you can just say, I love to communicate with my friends and family with stickers and GIFs, and now you can just sort of type into WhatsApp a turtle on a skateboard, and it will automatically generate a sticker that you can use right in your conversation. So that's a small thing.
So you could write anything with you, or is there
you can be creative, exactly.
Oh, okay.
And then on Instagram, we're rolling out a feature right now called Restyle, where I was actually just in India and I went to the Taj Mahal, and it was wonderful. And I have all these photos, and you can post them on Instagram, and you can just say, make this a mosaic, or turn this photo into animation, and it will right there modify your photo. And then allow you to share it on Instagram. So that's another example of sort of an AI-powered product that we're working on. And then the other one that we're very focused on is what we call Meta AI, which is our sort of chat assistant. And so already in a number of places, you can take out WhatsApp and you can message directly with Meta AI and ask it questions, ask it to create images for you, all for free. And so the hope is we can put that technology, that power in the hands of everybody who's using our products around the world this year.
Now, if you talk about last year, the AR and VR category saw an uptick, especially after the Vision Pro 2, there was a lot of interest. You touched upon Quest, and you guys are working on that front. How's that coming along, and where do you see it? What kind of a role would AI play there when it comes to the Quest?
Yeah, so we're really excited about Quest 3, and we're continuing to work on sort of the next generation of these products. But Quest 3 is something that people love. I have it, I use it, I love it. A lot of it is about gaming, but increasingly people are finding social experiences in the metaverse through devices like Quest. And our flagship product there is called Horizon Worlds, and it allows you to sort of create a space, create a world, create games within that world, and interact with people in virtual reality. The other cool thing about the Quest is the mixed reality integrations and augmented reality integrations, which we're starting to see developers build more and more of that. And then connecting it to AI, I mean, all of this technology, including the way the hardware directly operates, is either enabled or accelerated by advances in artificial intelligence. Whether it's with the Quest Pro, helping with the eye tracking, or rendering the actual experiences in the headset, all that is accelerated by AI. And we're just going to see that take off more and more. One thing that I'm really excited about is the ability to use generative AI to directly create VR or mixed reality experiences. You can imagine just saying or typing, create a VR room that resembles the Web Summit stage, and imagine something like that just being created right there for you in Horizon Worlds. Right now, we are still constrained in what we can do in the metaverse by the speed at which people can create those new experiences, and I think these generative AI tools are going to really help with that.
Now, I want to broaden the discussion, talk about AI, because that's the buzzword right now. Everyone's been speaking about what kind of impact it's going to have. But along with a lot of benefits which we spoke about, which Meta has also been utilizing, there are a lot of challenges that come up. In fact, it reminds me of what Stephen Hawking said in an interview about 10 years ago. He said AI would mark the end of the human race. I mean, this was of course in 2014, and now we are in 2024, where we are seeing the benefits of AI, but then there are also concerns about that. How do you see the challenges of AI, and how do you think that can be addressed? Because you have Sam Altman going and saying that, well, it's very dangerous. I mean, someone who's at the forefront of this. How do you manage that?
It's a great question, and these are things that people need to be discussing. This is powerful technology with a lot of promise, but a lot of excuse me.
That's what AI created.
Yeah, is that
not generated.
AI something. Yeah, I mean, so these are really important conversations, and it's good to see governments, civil society, companies directly discussing these issues because they are incredibly important. I think our view is that artificial intelligence, artificial general intelligence is coming and is going to be good for humanity, but we have to build it responsibly. And so, from our perspective, that means having the right principles in mind, having the right people involved in the conversations, having the right processes for actually building the technology. So on the principles front, we need to build these tools with things like privacy, safety, security, inclusiveness, accountability, transparency. These are things that need to be more than buzzwords. They need to be the mantra as we're building these tools. And that's something at Meta. We have the responsible AI pillars, and we're focused on those in all the products that we're building. The other part is, as I said, making sure that the right people and lots of people and diverse people and people around the world are plugged into these conversations. And so we very actively try to engage with academics, governments, civil society, press, to make sure we're thinking about all of the various concerns and potential issues. And then on process, the industry is very focused on, but needs to continue to get better at things like red teaming, automated evals, structured industry collaboration to share information about risks. One of the things we're really focused on is the AI Alliance, which is committed to sort of open innovation in the AI space, but in particular, building tools for developers to support openness in a responsible way.
You touched upon some of the concerns, and OpenAI recently came out, for example, with Sora, which is the video generator, and there's this whole chat about deepfakes and frauds, especially in an election year in the US. Is that a big concern, you think, for the industry, especially when it comes to deepfakes and the misuse of AI, especially when it comes to electioneering and things like that?
Yeah, it's a great question. 2024, I think, is the year when more people will vote in the history of humanity. This is a big year for elections, and we at Meta, and I know all of the other big companies as well, are really focused on making sure that our tools, our products, are used responsibly in that context. And when it comes to AI-generated content, we have a lot of experience with content moderation, and indeed a lot of that is made better by artificial intelligence. But the advent of these AI tools is different. While the existing policies are going to apply, whether it's created by AI or not, we do need to take a hard look at what sort of changes are going to come, and what processes and norms we need to build. And from our perspective, one of the key norms here is transparency. And so we've been partnering a lot with others in industry through the Partnership on AI, but also other forms of collaboration, to align on a set of protocols for invisible watermarking and embedding in tools like Sora in the images that Meta AI creates, invisible watermarks, and then standardizing that so companies that are helping people distribute that content can figure out how to surface the fact that it was AI generated to their users. And we at Instagram, Facebook, we've aligned with our industry partners that when we detect those invisible watermarks indicating that something was created by artificial intelligence, we will surface that through a label so that users know, hey, this image of a turtle on a skateboard was created by AI. That's probably a bad example because that's not super photorealistic, but that's the basic idea. Surfacing that information for people.
So the labeling bit could be that, could be a good indicator as to whether this is AI generated or not.
That's the idea, and it is also important to say. I think Trevor Noah said it better last night. If anybody tells you they know how this is going to turn out or they know what the right answers are, be pretty skeptical. But this is what we're working on with others in industry, and it's a strategy that there's a lot of support for in industry, with academics, with governments. But we'll have to see if that proves to be the right strategy. And it's certainly not going to be the only strategy. We're also investing in automated detection of content generated by artificial intelligence. Last week at the Munich Security Conference, a number of companies came together to announce a tech accord to really redouble our efforts to red team our products in an electoral context, to invest more in detection, to invest more in collaboration with civil society organizations working on elections to identify risks, etc. So there's a lot of energy, there's a lot of focus, there are a lot of good ideas, and we're committed to doing our part, but we also want to be humble and candid about what we do and don't know.
Finally, to end on a note, yes, there are challenges with AI, but there's a lot of opportunity. How do you see AI shaping up, and what are you excited the most about when it comes to AI? Especially, where do you think it's going to have a profound impact? One area where you think the space looks really exciting, and this is what I'm really looking forward to.
That's another great question. Look, I was super excited to just walk around the floor at the expo here and just see all the pitches and all the companies that are out there, and so much of that is enabled or supercharged by AI. And so whether it's healthcare or transportation, or I just came from India, as I mentioned, and there's a lot of cool work with AI and agricultural productivity that's super promising. But I'm a nerd, and so personally, I'm most excited about all the educational stuff. I'm so excited for everyone in the world to have access to a personalized AI tutor who has access directly to all of human knowledge and can interpret it for what you need to understand or what particular questions you have. And then you layer on top of that the metaverse, and you can imagine you're talking to your AI personal tutor who's helping you learn about the history of a particular region, and then all of a sudden you're just in that space virtually walking through the ruins of the temple or whatever the topic is that you're interested in. So for me personally, it's the education stuff for children, but also people like me who are young at heart.
Well, Andy, thanks a lot for sharing your thoughts. Really interesting times, and we look forward to seeing some of the products that are going to be coming out from Meta in the years to come. Ladies and gentlemen, thanks a lot for joining us. That was Andy from Meta.
Thank you so much.
So, we are going now to another stage. See you. Leaf will be finished.
Okay.
And don't worry, we will try make it one more time.
Before lunch. Kitopi was one of the first movers in the cloud kitchen space, helping develop the managed cloud